Hey everyone, from Nashville. Looking out over the Nashville Convention Center, which is right here with the green roof. Right up there, the green roof, right above my head here from the Nashville Convention Center, and the hotel right across the street from the Nashville Convention Center. I just wanted to touch base with you just quickly and shoot a quick little video about the stock market. I just got done watching the U.S. news, the 6:30 news, and unfortunately they don't cover anything any longer that is news at all. They don't cover what's actually happening out on the streets of the United States of America. So the bank run is not over. It's actually accelerating very, very rapidly. So far, banks have gone to the Federal Reserve window and have drawn over $320 billion of liquidity from the Federal Reserve window. So they've borrowed money for up to 28 days from the Federal Reserve window. So what's happened is all of these banks have invested in T-bills, in government treasuries, the 5-year note or a 2-year note or a 10-year note. As interest rates have gone up, as the Fed Reserve has been raising interest rates to try to keep inflation down for you and I, because it's crushing us, to try to help us, the government has been raising interest rates. As it raises interest rates, those bonds that the banks bought back in COVID when they were ripe with all kinds of money coming into them from the government again, because every dime that we got in the middle of COVID went into our savings accounts at banks, and those banks used that money to buy T-bills. It's what they did. Well, the problem is that those T-bills are only yielding, say, 1%, and that's a really good rate for a lot of them, because some of them are even less than that. And now interest rates are now 4.5%. So those bonds that they bought dropped tremendously in value. So all these banks have all of these bonds on their balance sheets, on their books, that are at a loss. All right? So every bank, I don't care which one you look at, every bank has unrecognized losses in their bond portfolio. And they weren't paying any interest rates to get people to keep their money there either. So if you can go out and buy a bond fund and earn a 4.5% return or a 5% return, because that's the open rate right now, then people are going into the bank, like, say me, I've got money in a Canadian bank. They're going to the Canadian bank and saying, hey, look, I'm not earning anything from you. I'm going to take my money out and put it into a bond fund where I can pay myself, because I'm a financial advisor, and get a higher rate of return. Doesn't make any sense for me not to do that. Unless the bank can come up and say, Brian, we recognize what's going on and we want to pay you for your money that you have with us. We want to pay you a better market rate. But the banks aren't doing that. They're all scared to death because they're all recognizing that they need the spread because they've lost so much money on their T-bills. And then the other thing that's also a challenge is office, other than here in Nashville, office buildings. When I was in Toronto, office buildings are vacant, massively vacant. Everybody's working from home or doing other things. They're selling Hot Wheels and Matchbox cars. They're doing other things for themselves. They're not going to work any longer. So office buildings, other than here in Nashville, are sitting vacant. The problem is that the portfolio, those buildings have massive loans on them. And because they're half empty, their payments are not being paid. They're not, the financing on that building is not getting paid. This building probably is because it's in Nashville. But other buildings all across the United States are sitting vacant and they're not performing. So a bank has all of those office buildings on its balance sheet as unperforming assets right now. The other thing that's also a massive problem is that subprime auto loans is a massive problem. So subprime auto loans are grouped together in a batch of, say, 1,000 loans, and they're sold as a security, if you will. They're sold as a group of, like a bond, and the financial institutions all bought them up, thinking, hey, we'll be able to make some money servicing these loans. Well, the problem is that all of that subprime auto stuff is now all underwater. There's places like Washington, D.C., where over 40% of the cars are underwater. People just start paying their payments on their cars. They're thinking, hey, the government's going to backstop me. The government just backstopped those other people. Why wouldn't they backstop me and pay for my car? So nobody's making their car payments. And all of this is also on the bank's balance sheet as unperforming assets, unrecognized losses. It's a massive, massive, massive problem. The federal government stepped in and backstopped all the banks with $2 trillion. And now the problem is they don't think that that's going to be enough. So right now, the banks have gone to the Fed Reserve window in the last week and have drawn $320 million from the Fed window. So that's the fastest draw at the Fed window historically since 2008. It's actually faster. The draw is faster at the Fed window than 2008, the financial crisis in 2008. The news in the United States isn't covering it. They're not talking about any of that because they can't. What you don't know is that SVB Bank, the one that the government stepped in to save all of the depositors, the reason the government stepped in there was that there was a lot of Chinese depositors there. And the government wanted to make them whole. So they stepped in and made everybody square. It was the 16th largest bank in the United States. And there was a lot of uninsured mortgages there. So at the end of the day, the challenge is that when the Fed stepped in and guaranteed everybody's investment there, everybody's deposit there, then what they were saying to everybody else was, we're going to backstop everybody. But Janet Yellen today was asked about that, and she said, Senator, we'll pick and choose at the Federal Reserve. So what the process is, as you know, Senator, the process is that we at the FDIC look at it, it comes over to the Treasury Department where I look at it, and then it goes to the President who he looks at it, and if we all decide to backstop the deposit, then yes, we'll do that. So what that just told us was that the federal government will discriminate against which financial institutions they save and which institutions they backstop. So because SVB had all kinds of Chinese investors there, and because they had just given over $80 million to Black Lives Matter. And so the government stepped in and backstopped SVB. And the best bank in the San Francisco Bay Area is the other one, FNB. Actually has a really strong balance sheet, actually has really good processes involved in it, goes about the business of helping people every single day, and is very conservative with how it looks at people. That stock, unfortunately, is getting crushed because it was also caught up in the SVB collapse, basically. And now $30 billion has been invested into trying to save it. And they're finding out very rapidly that $30 billion is not going to be enough. It's going to probably fail over the weekend. So what's happening now is some of the major banks are trying to buy it, trying to negotiate a way to be able to take out all of its stock. We'll see what happens over this weekend on whether they can save it. But notice how all of the problems are in San Francisco, which is a Democrat utopia out there. which is crashing and burning and failing very, very rapidly. And that's going to be dragging the whole system down. The other thing that the press hasn't covered for you is Credit Suisse, the massive European bank in Switzerland, went to and was able, the Saudis are invested in that bank, and they said, you're not getting any more money. We're not giving you any more money. We don't have any more money to be able to give you. And so then they went to the Swiss National Bank, which is like the Federal Reserve. And the Swiss National Bank deposited money, $54 billion, into Credit Suisse. It's not enough money. The losses there are so massive that it's not enough money. So the problem now becomes how many other international institutions are simply belly up. If you have on your balance sheet, you have unperforming office buildings, you have unperforming car loans, and you have unperforming government bonds. So you have unrecorded losses of, let's say, I don't know, $30 million. Keep it simple. And you have $28 billion of deposits. You're operating at negative $2 billion. You are belly up as a bank. You're gone. You're just being hidden right now from everything. And that's what's really going on right now is we're not being told by our press what is actually physically going on. And the stock market is being held up by the federal government, all of the same things that they did in 2008, they're doing now from an intervention perspective. So investors don't feel as much of the crush in anything other than a bank stock. But you're going to start to see that bleed over into other institutions. Office building REITs, of course, have gone down to nothingness pretty much. All of the car loan places, or the car places like Carvana, is trading at zero, basically. You're going to see all of the other weak ones also get crushed in all of that as well, too. So my dinner reservations are ready. I'm going to start walking that way. Have a great night. That's what's going on with the banking sector and in the markets. We'll have to see how bad this actually gets.